Okay, welcome everybody. We might extend today a bit. Today we're just supposed to be talking about the importance of risk management and actually managing a trade. I'm gonna show you some tricks that have helped me, especially if you're in that kind of phase in trading where you've found your optimism. You're at that point where you might even be break even in your trading, and this is gonna kind of take it to the next level. Because as we know, trading is all about eliminating unnecessary loss and having a statistical advantage against the market. So today I'm going to show you a few tricks. After we do that, Peter's going to go through gold, and then I guess we can go through some charts, break down some charts for you guys. Real nice. Let's we'll give it a couple more minutes. See if we can get to like 40, 45 maybe. That'd be nice. We killing up today, right?
What's he saying?
Notepad ready. Nice. That's what I like to see. The full right up. Okay, nice. Let's go. Let's head straight into it. I'm on the laptop again today, by the way, guys, as usual. Okay. So, before we get into this stuff, we might as well start talking about the importance. Okay, so when it comes to trading, as we all know, it's about having a statistical advantage. And I feel like when you first come into these markets, risk management is one of the first things that you're taught, which is a given, right? Wherever you learn to trade, whether you trade with support and resistance, I don't really care. You get, to an extent, taught how to use risk management, and they may tell you to risk a certain amount. They may tell you to have some sort of trading plan, but if you're new to the game, hearing all this information can be daunting, because all you want to do is you just want to get familiar. You want to find your common ground in the markets. You want to learn what works, what doesn't work, and especially what is difficult is you might have opened up your live account and you might see something and you just might be so stressed out and have so many different emotions, you don't find the time to actually calculate your risk properly, when it is the most important thing. Like I say, in these markets, it's about having a statistical, and we all know. Let me mute some mics real quick. Unmute yourself when you need to speak. Just had to mute everyone. We all understand that when we're in the markets, there's a lot of different aspects that come into having that statistical advantage. Like, obviously, one of the main things that we talk about every single day is the fine line between skill set and psychology, and having the right patience in the markets, looking for quality setups, things like that. But obviously, when it comes to the emotions involved within trading, be it like revenge trading, all that stuff, all the mindsets we don't want to be in, I call it the loser's mindset, the stuff we're trying to avoid, it can be, well, helped. I can't say saved, but that stuff can be helped with a really nice risk management and trade system. Okay, so one of the first things I want to talk about is a question. I don't know why I'm getting this question, but I understand we have traders of all different levels in with us today, and well, obviously in Blue Wave as a whole. So obviously, when it comes to calculating your risk, we need to understand where we can do that. Okay, so beforehand, if you guys are OG traders, you may know of the app Stinu, but what actually happened is there was an update and you now have to pay to use these guys' services. I mean, they did blow up, so obviously starting to charge probably was a smart business choice for those guys, but for us as traders, it was kind of like, wow. So Stinu, if you want something on your phone that is kind of like simplistic, swift and fast, Stinu is probably the best, but you do have to pay. Okay, you have to pay for Stinu, but obviously there's also Forex Factory. It isn't as flush and easy to use, but Forex Factory is still what you need. Forex Factory, okay? And on these apps, you can get it on your computer browser, you can get it as an app. You can go on, you can put what pair you're trading, you just hit the button that says calculate by risk, put in whatever amount you want to risk, and it will give you your lot size, okay, for whatever. There's also one you can use for Bitcoin. Let me just grab that for you guys. Hold on one second. I just want to drop this website because Bitcoin trading, I know there's a lot of brokers whose what do you call it? Spreads are already coming down for Bitcoin. Bitcoin is actually becoming a lot more tradable. So this website is called, let me do that. This website is called, it's cashbackforex.com. This is where you can work out lot sizes for Bitcoin, okay? So if you're new to the game and you don't understand how to calculate risk, hit up these websites, play about with the tools and work out what you're actually supposed to do, okay? So First thing I just want to get into is actually you need to have some sort of systematic way you're going to approach the markets. It doesn't have to be down to a T, right? Because everyone understands when you first come to the markets, you're going to be spending a lot of time on the charts trying to work things out, and having a plan and restricting yourself looking at the charts isn't exactly the easiest thing to do. But what I will tell you guys from experience, and obviously when I say from experience, I mean when I implemented some sort of plan into my trading, that is honestly when I become profitable. I had a long break from trading, about 2 or 3 months. So when I come back with a completely different mindset, considering I've already been trading for a year and a half. I'm not gonna say it wasn't working out for me, because it was to an extent, but I just wasn't where I wanted to be with my trading. And I took a break and come back with a plan, okay? And that plan, all it included, just roughly, it included only trading one pair. It included having a system where I wouldn't allow myself to lose too much in one day or week. And so with that information, that pretty much allowed me to be profitable in trading, I put together just this little thing, okay? And all it is just a mini trading plan. Like I said, I don't really like the word trading plan. You just have to have a system in place, otherwise you're just pressing buttons frantically, okay? So first things first, what pairs are you going to be trading, okay? So the importance of having a set amount of pairs or a couple pairs you're going to look at is so important, okay? Because as we all know, if you are going to follow through with us and trade the way we trade, you need to have an understanding of a lot of different things. You need to have an understanding of higher time frame all the way down to low time frame structure. You need to understand the relationship between supply and demand across all time frames. And another thing you need to understand is that is constantly changing. The relationship between supply and demand on smaller time frames anyway is constantly changing. Every single time there is an impulsive move in the markets, the game plan should change for that pair. And if you have a watch list of say like 15, 16 pairs, you are only ever going to be scalping. You're never actually going to be on the correct side of the markets. Reason being, you don't fully understand what's going on with that pair. I truly realized the significance inside of this when I come back to trading, and I decided for the end of like a year, it's literally like half a year, I was only trading GJ, okay? GBP, JPY was my go-to pair. And the reason I did that is because I fully understood the pair, okay? I understood what was happening all the way from the monthly down to the 15-minute candlesticks. And what that actually done, one, it saves you a lot of time. You don't have to go from the top every 5 minutes because you understand higher time frame. Also, you're not ever going to get confused, okay? Because what often happens is an institutional trader or smart money trader will open a chart and he will see a setup, he or she will see a setup, and it will look perfect in his eyes. It will look absolutely perfect, but they disregarded higher time frame structure. And if they had taken the time to just look at higher time frames, they would have saw they would have noticed something that would have given them a reason not to take the trade, okay? Like key rule in trading, it's not about finding confirmations, it's about finding reasons not to take the trade. And when there's none, that's when you have a trade, okay? So having one pair or a set amount of pairs, no more than 5. There shouldn't be any reason you're trading more than 5 pairs. I mean, your portfolio, it's not about expanding, it's about having something you can rely on and be consistent with. I mean, this links to the idea of people always asking me, why don't I trade stocks? I mean, okay, cool. Stocks are cool. Stocks can be profitable. Why don't I trade stocks? Because all my money is inside of Forex. Why would I waste time trying to invest in stocks or learn more about stocks when that time I could have been learning, I could have made my money in Forex? You know what I'm saying? It's kind of like you need to put your focus somewhere. And if you're just clicking on a different pair every day, it's not going to work out for you. One, because different pairs have different characteristics, be it complex pullbacks, how it follows structure. Also, it's just going to be a different chart all in all, okay? And that can link up to the idea of like, don't put all your eggs in one basket. For example, if you're buying USD CAD, you shouldn't also buy USD JPY, because if one hits stop loss, the other one's probably going to hit stop loss because they both start with USD, okay? So the next sort of thing I want to talk about is having some trading hours, okay? And when I say trading hours, it doesn't mean you look at the charts, you're like a robot, you look at the charts between 6 and 11 every single day, because as we know, markets are abundant and different things happen at different times. Yes, we have our hot hours, like London open, New York open, London close. If you live in the right place and you can trade those hours, everyone knows that's when the moves happen. That's when you're going to get the best sort of reactions or impulses in the market. But what helps is having sessions you're going to trade. Depending on where you live in the world and depending on what pairs you want to trade, there's going to be a session that's going to suit you best. And when you put in the time to backtest London Open, London Close, New York Open, like the Sydney market open, you'll start to notice trends. For example, London Open, there'll always be some sort of supply demand burst. There'll be reaction of supply or demand. Always 8 o'clock on the dot. It happens every single day. You can go back test it. Same for London close. There'll always be some sort of dump or reaccumulation of orders. It happens all the time. And if you put in the time to back test and notice this, you'll know what sessions will suit you best. Okay. Also, in a sort of plan, you should have a loss per day. And what I mean by that is especially if you're new to the game, you need to kind of have a limit where you can say enough is enough. And the reason this is because I've said this countless times on these calls. There's two mindsets you're going to have in the market. There's the mindset of, wow, I'm loving this. I mean, you're going to have complete confidence in your setups. You're going to be making some money. Then all of a sudden you're going to take a loss. You might even take 2 losses in a row, and then you've hit a brick wall, and then you're going to get in what I like to call the loser's mindset. Okay. And no matter what, you're going to feel like the markets are against you. And what I mean by that is, have you ever been in that situation where you're just thinking, right, I've hit a stop loss this morning. I just know for a fact, right? It's just typical the way the world is. I know if I don't take this trade, it's going to fly to TP. I know if it's going to take the trade, it's going to hit stop loss. That is when you should not be trading the markets whatsoever. Okay. You need to get out because you're in what I call the loser's mindset, and it's not going to work out for you. You're going to see things that aren't there. It's all going to be crazy. Okay. So what my personal rules are is I risk 0.5 per trade, okay? So 0.5%, that is sometimes 1%, sometimes 0.5, depends, okay? But we'll get into that. So if I lose 2 trades in one day, I'll get out of the markets, and I won't just get out of the markets for the day. I'll get out of the markets, I'll go enjoy myself. The next day, I might just spend the day at the skate park. I might go meet some friends, and I might even be away for 2 days, but I just need to clear my head. And it even gets to the point sometimes where one day isn't enough. Like that day you're not trading, you may just be thinking about trading and think about them losses. And then when you come back, you're still in that mindset. You need to get away from the markets and give your head enough time, just completely come back with a fresh mindset, okay? Otherwise, it's not going to work. And that links to understanding the fine line between skill set and psychology, okay? There really is a fine line. And what's crazy about it is they are both as significant as each other, okay? Understanding both, but they intertwine so much, it's crazy. And this is why the financial markets, everyone knows they're manipulated. They are a scheme to take money off everyday people. There's just another way to rob the public and feed the institutions, okay? Feed the kind of elites in the world. We're not going to get into that because I can ramble up on that for ages, okay? So obviously loss per day per week, so that might include I know Peter, he has 3 strikes and he's out, so he won't lose more than 3 times in a day. If he does, he's out. He won't allow himself to lose like 18% in one day, because we've all been there. It doesn't feel good, okay? It can really lead to some I don't know, bad emotions. We'll just put it that way, okay? And lastly, how much are you going to risk per trade, okay? And this is so important. Like, this is so important, and being disciplined, okay? Because everyone knows in trading, it's kind of like you need to have a strong sort of will to be able to do it, because you have to set the rules and stick to the rules. And everyone knows they come into the market and say, right, I'm going to do this, I'm going to be different from everybody else because I'm going to do this properly, and you end up completely disregarding your own rules. I mean, I'm not going to lie, I'm not Mr. Perfect. I completely disregard my own rules sometimes, and I get punished for it, okay? It's just the way the world works, okay? So something like how much should you risk is one of the first things you need to, as we say in London, you need to pattern it, okay? You need to make sure it's patterned out. You can't be losing, you can't lose a trade and think, right, I'm going to risk 3% on this next trade to cover the last one, because that is just a form of revenge trading, okay? You need to have a system put in place. Me personally, I'll risk 0.5 for most trades unless I see major structure point opportunities that could lead in that could lead me to an extremely profitable risk to reward. That's when I'll risk 1%, or when I see a major structure point break with clear supply demand for the entry, then I'll risk 1%. But otherwise, all of my trades will be risking at 0.5%, because I know my risk to reward is TP1 will never be less than 1 to 10, so it's going to be profitable anyway, and it gives you more chances in the market. And I started risking 0.5% when I took my FTMO challenge, okay? Because I realized when I was 2% away from completing FTMO, I realized I don't actually need to be risking 1%. I can just risk 0.5%, and it's half the amount of stress I'm off my shoulders, and that's half the amount of emotion. So times when I'm thinking, should I just close? I'm not closing, I'm holding, because it's only 0.5% risk, okay? And you end up being a lot more profitable in general. Not only that, it links into the idea of how much money you can afford to lose. Like if you're, I don't know, say you trade with supply and demand, okay? Everyone knows if you trade with supply and demand, like you will never have a trade with a risk to reward underneath 5. It will never be underneath 5. And then that gives you 10 chances. Risk of 0.5% gives you 10 chances to lose before you're not actually making money. And everyone knows well, I say everyone knows, my supply and demand guys in here know how supply and demand works, okay? And this is how it's kind of different. This is why we like the idea of supply and demand, okay? So when it comes to losing 10 times in a row, I'm going to show you why that's not going to happen, okay? And this leads us on to the next kind of topic I want to talk about, and that's trade management, okay? So talk about trade management and linking on to how much do we risk and linking on to how we will never lose 10 trades in a row. Let me explain why, okay? So in this particular chart I've drew out, if you're a supply and demand gal, you'll understand clearly that demand is in control in this market, okay? So even if structure isn't as clear as this on an odd day, and you might end up trying to sell this market, okay? For whatever reason you are selling at this supply area, this is still a supply area. And what does that mean? You're going to get a reaction, okay? Even if it isn't the reaction we're looking for. So the golden rules are, if you want to write down in your notes, you will always get a reaction from supply or demand, but whether the reaction holds momentum depends on who is in control, be it supply or demand, okay? So what I'm actually saying by that is you always get a reaction from every supply and demand zone will hold a reaction, but it depends where the momentum is, okay? Whether it's a small reaction or it will be the continuation move, depends on who is in control, supply and demand. So in this case, uptrend, demand is in control. On the flip side, in a downtrend, supply is in control, supply is holding price down. We have bearish mitigation, bearish order flow, okay? In other words, bearish supply zones pushing us down. So in this case, we understand demand is in control, demand mitigation. But again, like I say you're on an off day and you misread structure and you tried to sell here, it doesn't matter because supply is still supply and you will get at least a tiny reaction, okay? As you can see, you get a small reaction and then a continuation upwards. And I've said this again countless times. That gives us a lot of opportunity and a lot of power, okay? So when it comes to trade management, if we understand that 9 times out of 10, we're going to get a reaction from a valid supply demand zone, that allows us to do a lot of things, okay? So let's talk about trade management for a second, okay? So when we're talking about trade management, let's draw out a scenario real quick. So say, for example, we have something like this, come up, and then we see this, okay? I know it isn't too clean right now, but let's have a look. Say your point of interest is here, okay? This is your point of interest, and your entry is the, I don't know, the 50% of the zone, like that, okay? And your TP is obviously the structure high. And say price comes down, price makes its way down, and it hits into the whole sort of demand area. We get a first reaction. We come down into the lower zone where the lower demand is, or the extreme as we may call it, and we get a small reaction, okay? Well, we didn't even get into it. Pretend that got in, and it would say that even the reaction was just this small, okay? That gives us time to do something, okay? I mean, there is many different ways you can approach to manage a trade. Like I'm talking about as you get entered, I'm talking about right now. So one of the first things you could do, and before I go into that, I just want to explain, when you're used to looking at charts and you understand structure well, there's going to be times where you're so confident, there's going to be times where you're thinking, I mean, there's a chance you can hit stop loss, but the risk to reward opportunity is too much for me to turn it down. And these are the times you need to kind of think, how can I manage this trade? So one of the first things you can do, and when I took FTMO, because I just wanted to be sure, I'm not trying to waste any money on FTMO, so I wanted to be sure. So what I did is, for the first part, I just, as soon as I got in the trade, as soon as I got any sort of reaction, I'd take the tiniest amount of partials, say £100 partials or £20 partials, and break even straight away. So that's one of the first things you can do. If you absolutely cannot afford to lose, you can break even upon first reaction. But what you'll find is, I don't know, say 7 or 8 times out of 10, price will come lower into your zone before making the move. And then you think, if only I'd waited, I'd have still been in the trade, okay? That's one of the first things that can happen. And that's one of the risks you need to be willing to take. Another thing you can do, which is going to kind of allow you to, how can I put it, be a little bit more lenient with your entries, is when you get the reaction, you can take small partials. Say, for example, you're risking 1% and you're 1% in profit. Even if you close 50% of the position and move your stop loss 50% of the way from where it originally was. So decrease your stop loss by 50%, and then you're completely like halving your risk. Okay, you're completely halving your risk, so there's not much risk involved at the moment. Another thing you can do is you can wait for your trade to go, I don't know, 2%, 3% in profit, and then you can completely remove your risk from the trade via partials. Then you can leave your stop loss where it is, and if price does decide to hit your stop loss, you're just at break even. Okay, so you just eliminating risk from the trade, and that's pretty much all the ways that I manage my trades. Obviously there's other things you can do, but I recommend doing these. Okay, and again, it depends on the situation, but saying that, there's going to be times where you're going to have to be patient. Okay, especially if you have a trading system works, and you understand that you obviously win at least 1 in 3 trades. You have to start to be lenient. Okay, especially when we're looking at pairs like gold, Bitcoin. I'm saying gold and Bitcoin because everyone knows, if you understand how gold moves, when we have a point of interest, like a point of interest here, gold will tap into that guy, might even tap into it 3-4 times. We could see the distribution schematic. It could test so many times. Okay, and it doesn't really give you room to kind of play about with your stop loss. Okay, but again, with a pair like gold, what can happen is price can come all the way down before it comes back up again, and it could still make the move. So when you might be 2-3% in profit, just take some risk out. Okay, take some partials out of the trade, and just leave your stop loss where it is. Taking partials is everything, and I realized that a long time ago. I mean, if you guys can relate to me, I don't know if you can, but when I first come into trading, I learned institutional straight away. And I never wanted to take partials because I was just greedy. I wanted everything from the trade. I wanted it to hit TP and take the full 5, 10, 20%. Okay, doesn't work like that. You have to take partials. If you want to be profitable, you have to take partials. Okay, you need to take out as much risk as you can. Like I say, it's about having a statistical advantage. Obviously, it gets to a point, if you would consider yourself a very good trader, it gets to the point where you understand how to take partials well. But this is for you guys that are maybe breaking even in their trading, or finding that optimism, finding that sort of patience. Partials are everything. Okay, but say you are more of an advanced trader, you understand partials make sense at structure points. Okay, structure points are everything when we talk about partials. But that's pretty much what I wanted to go over today. I just wanted to talk about trade management and having some sort of plan within our trading, because too many people come to me and asking me questions like, oh, how much do you risk per trade? Like, I keep doing this, how can I help? Just stuff like that. Okay, so what I want to do is I want to hand the stage over to Peter, because he's going to talk about something that happened on gold today, and he's going to show a few of you guys in here that maybe haven't learned about supply demand at all. He's going to show you guys kind of the setups we look out for, or the way we trade, or the way we use structure, and the relationship between supply and demand to get the optimum entries. Okay, to get the best entries. So I'm going to quickly check the chat for questions. You're definitely a British ally. Man's definitely from London. I love that. Smart, really smart. Okay, what would you do if you say 3 break-evens? Would that count to something? Break-evens, I mean, when we're talking about break-even, we've got to be logical. It isn't, you haven't lost anything, so it's not exactly like you lost. Break-even is fine a lot of the time. I'd say break-even is definitely fine. To continue trading, that is 1%. Does anyone have a list of all correlating pairs? I'm sure there is someone in here that will read that and they will now send it into the capital chat. This is good too. My FX book, Forex Factory. I said Forex Factory, didn't I, guys? I always get confused between the two. Let's run it back a second. When I said Forex Factory, I meant my FX book. Thank you for that. My FX book is the one I was actually talking about. It's because I use both for news and they hella confusing, you know? So I got 3 break-evens, but after I got 3 stop losses because of revenge trading. Okay, yeah, I mean, scrap what I just said. Maybe 3 break-evens. It can still lead to bad emotions within the markets. It can still lead to the idea of wanting to make that money back. And like I say, you need to use that rule of having a plan. And when you've exceeded what your plan says, you need to get away from the markets until you're not thinking about it anymore. Because as long as you're thinking about it, you're still going to be in that mindset, okay? So what reaction would you expect? 1-to-1, more or less. You need to see the momentum, okay? When we're talking about the reaction from supply and demand. So back to this point right here, where we always get a reaction from supply and demand. Even if it doesn't break structure, you need to look for the momentum, the quick candles, okay? The momentum is everything. Momentum kind of exceeds the break of structure when we're talking about points of interest, okay? As soon as you get that momentum, that is the reaction, okay? That is the reaction. And then if we start slowly moving back, we're most likely going to come over your stop loss, okay? So after the momentum reaction, at what risk to reward do you start securing partials again? So if it gets to the point when you've grown your account by a substantial amount, the whole idea of being worrying about stop loss just completely disappears, because you know you've made 100% of your account over, and you start to not worry. So at that point, you start taking partials at structure points, okay? So for example, let's have a look at USD CAD real quick. Structure points for USD CAD. Actually, no, the GJ trade. I know some people are still in the GJ trade. This was actually sent out as a signal last week. I know Pete's still in it for sure. But when we're talking about partials, for example, we got in here and we are looking at where we would take partials, okay? So first things first, let's talk about the logic behind taking partials. Let me go to the 1 hour time frame. Let's talk about the logic behind it. So when we're looking right here, when we're looking at the charts, what do we understand? We understand that when price is being controlled by supply and demand, in this case, supply is in control, we get the bearish order flow, bearish mitigations happening. Every time we come to a structure point, what are we actually coming to when we come to a structure point? In this case, supply is in control, so we're coming to demand. Demand is at every structure point, okay? And that's why it makes sense to take partials after we hit structure points. Reason is, we are battling. Every time you come to a structure point, we're in a battle between supply and demand. And whether supply is in control, it's going to determine whether we break that structure point. In this case, we broke it, okay? So TP1 would have been right here. We actually made it here for other reasons, but I don't want to confuse you guys. So TP1 at structure points again. And then TP2 would be at the next sort of structure point. This is actually a demand zone, but we're just going to call it a structure point for now. So this is where TP2 was. And like, as you can see, like, it just comes down to structure points, because structure points is where you're going to find the demand in the markets. On the other side, on the flip side, say we was in a buy right here, structure points, like for example, we was actually in a buy right here, but I deleted it just earlier when I was going through a chart with a student. Structure points, TPs are at these structure points where you see these lines, and the reason is, this is where the supply is. In this case, obviously demand is in control, and the supply is inside the structure point. So every time we have a battle between supply and demand, and we break that structure point, that's where we take partials, because at that point, price could just easily reverse on us and come past that stop loss. So it's so important to take partials at structure points, okay? So I hope that answers most of the questions. How much do you take out each structure point? Okay, so me personally, it depends, okay? It really depends on the risk reward potential and higher time frame structure, okay? So if I am in a counter trend on the daily or weekly, when we get to a major structure point, I'll take 50% off and let the rest just run. I'll let the rest do whatever it wants to do. When it comes to trading with the trend, and say you are in a very, very nice swing position, maybe you've caught the weekly structure point and you could even go 1,000, 5,000, 10,000 pips in your direction, that's when I start taking 10 or 20% off at major structure points. So it really comes down to the situation. How do you define structure points on the major supply and demand zones? Major and minor structure, we do have sessions, okay? So before I hand the stage over to Peter, I'll just break down how we kind of operate as a business, okay? So obviously we do free Zoom calls and we cover lots of different topics. We cover basically the whole way we trade, okay? From day one, we talk about, we have sessions going deep into major and minor structure, going deep into candlesticks, going deep into supply and demand. Obviously, we talk about structure and liquidity, and we have countless sessions going over the same stuff. We also have other sessions talking about this exact same stuff, risk management, okay? Risk management and trade management. And every day we try and cover a different topic in as much detail as possible. And as you might know about Zoom, every single one of these calls is recorded and it is sent into our recordings channel, where if you do become a VIP member, you can go from day one and you can learn inside out how we trade. And this is how the students in our chat are getting these entries, okay? Because they've understood how to read supply and demand through either me, Peter, or Derek, or one of the other guys that teach supply and demand. And that's how they've learned. They've literally learned from watching the recordings, hearing the same stuff over and over and over again. So before I start talking about major and minor structure, I would just say it's in the recordings channel. If you want to learn about it, the VIP membership is literally $50. Well, $50, 50 Great British pounds for 1 month. Okay, so there is a lifetime payment you can pay, £250, and you can get access to our signals every single day. We do daily signals. We have endless recordings you can watch over. And with VIP, you're entitled to a one-to-one call every fortnight to see where you're at with your trading and kind of ask whatever questions you're struggling with. But a lot of the time, honestly, it comes down to psychology. And when I'm doing one-to-ones with students, it comes down to me sitting there talking about having patience and having the right psychology regarding the market. So if you're interested in that sort of stuff, like daily signals, recordings, just hit one of us up on Telegram. But yeah, we don't really cover other topics on calls on specific like areas, if that makes sense. So right now, what I'm going to do, can we trade along with you in membership? Yeah, of course, that's the whole idea. I'm going to hand the stage over to Peter because he's going to talk about gold, then we can go over some pairs. But yeah, Peter, do you want to take the stage?
Yeah, I'm fully ready to take it out.
Okay, actually, before Peter takes the stage, we've got 10 minutes left in this meeting. I'm going to end this one and start a new link. I'm going to set up a Zoom account so we don't have to keep doing this. So guys, I'm going to end the call. I'm going to start a new one. Make sure you guys join back because we've got some more nuggets to show you guys. So the link will be sent out exactly where you found it in literally about 30 seconds. So I'm going to end it right now. Join the link, guys. 2 seconds.
So we're gonna wait for some more people. It was like 40 people, if I remember right. So I'm gonna wait like for 35 at least. So we can drop your questions, prepare your notes. We're gonna cover some charts. I'm gonna mainly cover the gold today because the gold is really clean and it's my major pair. And I want to talk about psychology then. So get ready, guys. And don't be scared to ask, okay? No question is a stupid question. Everybody learning here, so it's okay to not know. Okay, some questions and I will start. I have 2 questions. Take 50% partials when you hit 1 to 10 at least. Yeah, bro, I'm still saying like plan your trade and trade your plan. Okay, so you're gonna make a plan how you're gonna trade this pair, for example, like gold me today. I had the plan that I'm gonna execute here, I'm gonna take partials here, I'm gonna fully close the trade here, and then I was just trading the plan. Okay, so you need to define what you're gonna do before you execute, because if you're not gonna make the decision before, then you're gonna be lost in it, and you're not gonna make money because you're always gonna keep the trade running.
I didn't see you.
Oh, geez, mute the microphone, guys, please. Luca, can you please mute everybody? I can't make it for me, please. Okay.
I muted everyone.
I was muted too.
We good.
Okay, so guys, you need to understand that if you don't plan the trade, you're not gonna win the trade. Because you need to have a plan, as like in the life. You need to have planned everything. If you're just gonna go, and you're gonna make the decision when you are in the trade, you're always gonna fail. You need to tell yourself what I'm gonna do now, and then just do it. Just follow it, okay? So I'm gonna share my screen. Give me a second. Okay. So share screen. I see some questions, so I will look for them. Is everything okay with the sound and mute everyone? Hello, Kill. I love to see you guys here. Thank you for coming. Screen blank, yeah, man. I wasn't sharing it. All good, bro, loud and clear. Okay. I'm sorry for my English, guys. Sometimes it's very horrible, but understand me, okay? Thank you. So, guys, what's the first thing I want to cover? I will firstly cover the charts, and I will talk about psychology and motivation then, because the 90% of the trading is just the mindset and the psychology, guys. The 5% is your technique. It means that, for example, you know, supply and demand, and 5% is risk management for me. This is the trading. If you think you're gonna learn the supply and demand from us and you're gonna be profitable trader, nah, guys, you're gonna burn accounts anyway. Even if you are Warren Buffett, if you don't have a discipline which you follow, if you don't set the rules and you follow with them, if you are not disciplined enough, you're gonna lose money every time when you're gonna enter the market, guys. The market is made to people lose money. It's not there to, you know, to make you money. The institution and the bank just made it to people lose their money, and they just need to win. You know, that comes to the thing, the market. When the market is moving, like you, when you need to move, you need the energy to move. Your body needs to transfer the energy. It's the same for the market. The market needs to eat. I like to say the market needs to eat before he can move. And when he is fed enough, he will move. What does it mean, guys? The only thing which we here are learning is the liquidity. Sorry for my keyboard if it's too loud, like I can do nothing with it. Or the flow, supply and demand, and the structure, okay? It doesn't mean the priority is liquidity, then order flow, then supply, okay? The priority is structure and then the supply demand. But guys, I'm telling you, the main difference, like what we're doing, is that we don't care about, solo, what is liquidity, what is order flow, what is supply and demand. We are trying to combine everything together because the price works together. It doesn't move in terms of liquidity and then order flow and then supply demand. No, it moves in the way all of this. This is the package for the market, how they can move. So if you're gonna understand this package and you're gonna be able to use it, then you can be a profitable trader. So when market needs to eat, what does it mean for me? It's like, for example, let me draw something. Let's say we are in a bearish trend, okay? Oh, I need the red color. Okay, so we are in a bearish trend, okay? We got the lower high and then a lower low. And we got the break of structure to the upside, okay? You always, what we teach is there is some supply zone, okay? And there is, for example, some demand zone. Removing that holding supply zone, okay? I will cover it later, don't be scared. But what you need to understand is if you have 2 points of interest, like many of you guys have, because you don't know how to trade 1 minute, but you still trading, you're still losing money and you don't care. You're still asking yourself, why I lose money? But it's only because you don't want to understand the market. You are blind. You just see what you know and you don't want to elevate, okay? You need to understand that even me, even Luca, we are learning every day, okay? The market gonna learn you every day. Because the market is just the beauty, it's the fractality, it's everything. For me, the Forex is the mirror of the mind. So if your mind is unclear, then your trading is not gonna be clear, guys, okay? You can't trade with emotions, be like the robot, be like algorithm. Just execute a stupid trade and don't think what's gonna happen, okay? You need to accept the risk before you're gonna enter the market. If you don't accept the risk and you lose, guys, you're gonna have crazy emotions, you're gonna be very broken. So just understand that fact that you are risking something and accept it. If you don't accept it, just guys, don't trade. Okay, leave the trading, leave the group and forget about trading because you're only gonna lose money. It's only up on you, okay? So let's me continue. Sorry for me losing in it, but I want to cover everything and make sure that I say what I want to say. And you make sure that you take in the notes. I'm gonna check the chat, okay? How I love the sound of mechanical keyboard. Yeah, just trade or plan. Exactly, plan, trade or plan. This is what I'm saying, and I'm gonna say it every day, every time when you're gonna see me. Okay, guys, let me get back to that to that market eating. Okay, in this, okay, there's the demand zone, and there's another demand zone. Okay, my point of interest, and people always gonna trade the first one. I don't know why, but they don't want to accept the risk that the market might come here and just go higher. They don't want to miss out. There's something called fear of missing out. When you jump into the market, when it's reacted on your point of interest, but you are late. You anyway gonna jump in. You see the engulfing candle and you just tap in buy, and the market fucks you because it's made like that. It's made to fuck you. Okay. So what I mean when I say market need to eat, the market always need, guys, liquidity. So you're gonna see the chart coming to your point of interest, stop you out, and then move in the way. Okay, forget about the second point of interest right now. We have just one. And then you can understand, okay, what was wrong? What was wrong is the market wasn't fed enough, okay? He was hungry. And in this point, he get enough, okay? He got enough like liquidity to be able to make this move. Because guys, just how the banks move, they don't use their capital to enter the trade, okay? What they do is that they're gonna come to their point of interest where they want to buy, and they're gonna start to slow down and accumulate the orders. This is what you call the Wyckoff. I know some Wyckoff experts here, but guys, we don't base our trading on the Wyckoff. For me, Wyckoff is nothing, okay? It's just, I like to mark it up when the trade is done. I like how it looks, okay? But it's nothing for me. It's just the theory, and theory is made to describe something, okay? So it's just describing, it's just giving name to the leg, okay? For me, Wyckoff isn't what I base my trading. But you're gonna see the price start to accumulate orders, okay? Accumulate of orders doesn't mean accumulation. Accumulate of orders mean everything like from the Wyckoff, okay? It means distribution, redistribution, accumulation, reaccumulation. Everything, you just stuck in the orders. And then what they're gonna do, they're gonna take all money from, okay, can you mute yourself, please, guys? Thank you. They're gonna lose your money, your stop loss. They're gonna take it, they're gonna earn it, and then they're gonna use it. So they have free move, and this profit is everything like for them, you know. They're never gonna trade their own money. Of course, like some of them, because they can take that much liquidity from us. Like nobody cares about your 001 lot or 10 lot. Okay, they don't care. They put in the per slot in, so they actually care only about big fish. Okay, Luca, can you please mute everybody? I don't know if people are able to mute them, but it looks like they are not. Thank you. Okay, so this is the fact, guys. Just understand the liquidity. Go back this, and this also comes to think like when you're gonna hear somebody talking about anything, about trading, about life, about motivation, about it doesn't matter, you know. Also in the school, just go and backtest it, guys. Don't trust every idiot on the internet, okay? Just don't be a stupid goat and follow everybody blindly. Just think, okay? You are the guy. You are the person who has the brain, and you are able to think. So don't be lazy ass and think, okay? Backtest it in your own. You're gonna risk your money to what I'm saying. Like, guys, okay, if you want to risk your money to somebody, okay, then I'm okay with it. It's your money, okay? I'm not gonna lose the money. But it's the point, guys. Don't just blindly accept everything you hear on the internet, okay? Just don't accept it. Backtest it and find if it's really working, okay? So I'm gonna go to the charts, guys. I just wanna cover the call, because call was really clean. And I also hear Luca was talking about the major and minor structure. So this is what I covered today. I will cover only this part. Oh, let me draw. Okay, I will cover only this part, right? Only this. So if you know what's happening there, it's good. But right now, forget it, okay? Just accept what I will be saying, what I will be drawing. Oh, that's not what I wanted, but thank you for taking me a screenshot. Perfect. Okay, let's go, guys. So what we can see here, I'm gonna just hide this, okay? Because I know people are not gonna ignore it. So, okay, you're now ignoring, right? You're not ignoring. I'm gonna just show the low. Okay, so let me look for the major thing in the markets, guys, and it's the structure. What is the structure? Structure is just output of price in a time. Okay, so this is my low. This is my, let's say right now, don't care about time frame, guys, because you need to understand what you see on the 50-minute. You will see the same thing on the monthly, on the 6 months, on the 1 minute, on the 5 seconds. And if you are gonna be able to understand it, it doesn't matter what time frame is there, what number is there. Okay, don't care about it. Just you know, I can block it. Just don't look at the time. Just look at the price. Okay, and forget what you know about gold structure before. Just focus for what's happening live. Act like it's a new chart. Okay, so we got the low, major. Okay, I'm gonna be drawing the major structure with more contrast colors. Okay, so we got low, lower high, and then we got the lower low. Okay, what we got here, guys, this is my breakout structure. Okay, so I'm gonna significantly draw it so you can see it. Make sure, guys, your charts are clean for you. You can see what you trade. So we got the breakout structure to the upside. Why? Because market was able to make a new high, taking me the previous high. Okay, so what I can understand right now is that markets, again, what I told you guys, when the market move and we break down structure, markets need to eat. And look what happened here. Okay, this is the liquidity, right? Liquidity, guys, if you think that liquidity is equal low and equal highs, you are wrong. Okay, liquidity is everything, guys. Every candle, every wick, every fucking stupid shit you see on the chart is liquidity. Okay, everything is liquidity. Accept the fact. No, accept it. Just accept it. Don't think about it. Just accept it. This is what you need to accept. Everything is liquidity. So if you're gonna look for the liquidity only equal lows, equal highs, and trend lines and blah blah, you are gonna be wrong. Okay, liquidity is everything. So the market, look what happened here. Okay, we got pushed to the low, then we got the breakout structure. But what happened here? I will tell you guys that like 90% of, let's say, smart money traders and those, you know, support and resistance are gonna be buying here. They're gonna do some action. And what banks are just basically gonna do, so can you see the big impulse, the fast impulse coming through? They did not even stop. Okay, they just came through. And why? Because they needed to eat. And guys, if I told you that this is the cause and this is the effect, this is what you need to accept. Okay, the market was fed enough. We took out if you bought here, if you bought here, you got stop loss. 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 Everywhere. If you don't manage your trade and put to break even, or, you know, just take profit, you've just been taken out. And then the market moved. We all here know it. I think every one of us was on the retail side. And if not, it's, you know, I think it's good to know how other people's like trading the candlestick patterns and, you know, just patterns like trend line, head and shoulders, and I don't know what even more, like wedges and those things, like the retail side. Okay, so we got the low now. The market is fed enough and we can move. So let me show you. Okay, we got the new high. Why this is my new high? Because it was taking the previous high holding me the structure, right? High, low, high, lower, low, high, low, I'm sorry. And then, can this be for me a lower high? Guys, not. For me, not. Why? Because the market never did the 50% retracement after we create this high, okay? So, for me, this is my high. But guys, can you tell me, is this a valid high-low right now? Just drop into the chat 1 if you think it's a valid high-low, and 2 if it's not yet, for example. Okay, don't be scared, guys. Don't be scared if it's wrong. It's all good, guys. All good to be wrong. We are teaching here, okay? So 1 is it's a valid lower high, so I can draw my circle here. And if it's not, just drop 2, okay? Okay, guys, I see some ones. Yes, why? Why it's not right, okay? Why this low is not valid yet? Because low, to be valid, it needs to take the previous high. Let me draw it, okay? If we are in the uptrend and you got the higher high, as we got now, and then you got the high low. The lower high isn't valid until it takes the previous high. So in this point, this became my high, my low, and my higher high. Okay, same as here. Okay, this low wasn't valid until we got this breakout structure. So then I can say, okay, this is my high low. Okay, so in this point, do I get the breakout structure? I don't, right? Because this is my high. So right now for me, this is not the valid low, guys. Okay, this is how I see it. And now we will come into the more source on the lower time frame. Okay, because guys, look what happened here. The market was eating, took the liquidity, and then we move. Look here, guys. Okay, what happened? Market took the liquidity. You can draw, you can draw your trend lines here. You can draw, I don't know what you want, support, resistance, but this is liquidity. You need to understand that this is the liquidity. And look what happened. Again, the market just stop hunted those lows, and then look what happened. We exploded to the upside because the market was fed. Okay, he got the energy, he got the power to move. So we just moving. Now I will drop into the fractality of the market. So I hit my demand zone here. It doesn't matter right now. I don't want to cover this demand zone. Just you can backtest it. Why? I will tell you, look at this supply. But I will move into this part. Okay, so right now I can understand that we are bullish, right? Because I got this high, I got this high low, high high. I don't have high low yet. Okay, so I got just the higher high. What I can expect, I am expecting price to make me a high low, and then again high high, and just continue like that until we got the breakout structure. Okay, so I just need to accept the fact, I can, guys, don't think. Everyone here is trying to be predictive, but nobody is trying to be reactive. But the major thing on the market is be reactive. Okay, fuck your prediction, guys. Don't think. If you are thinking, you are over trading. That's what Mark Douglas say in your, in the How to Become a Disciplined Trader. Very good book. I recommend it. Everyone read it 10 times. Okay, then go to trade. You need to understand, if you are thinking, you are over trading. Because you're creating the bias, you are looking for reasons why market should follow your thoughts, and it's wrong. You're always gonna lose money, guys, trust me. Okay, right now we have this major structure. So major structure is bullish, okay, or right here, major is bullish. Again, sorry if it's too loud, this keyboard. So major structure is bullish right now, okay. What I need to understand is I will always have a minor structure in the major structure. Okay, so this is my major structure, this blue, and this smaller red is the minor structure in it. Okay, so it's gonna look like that. But guys, don't forget that inside of that red, you're gonna have a minor structure inside of it, which you can trade. If you are able to understand the major and minor, you are able to catch crazy trades, crazy momentum kicks in. Okay, so let me show you. Right now, this is my low and this is my high. This is only fact on the market. Okay, this structure, guys, this is the only fact. I have to respect it. I don't have to think, okay, this is my probably lower high, so we're gonna take this high and make pullback, take it, blah blah. Guys, fuck it. Okay, just be reactive, not predictive. So what I was today doing, I just look at the chart, and I hadn't much time today because the school is so annoying, but I just look at the chart and I was trying to understand the simplicity of the market. Keep it simple as possible. So I will take, not the significant color. Okay, so this is my major, and right now I'm drawing the minor structure, guys. Okay, I got my high, I got high low, I got high low, I got high, and then I don't get the high, I get the lower high. Okay, so there, guys. Oh, wait, sorry. Oh. Hey, this is exactly what I wanted to do. Yeah, thank you. Okay, so here we got the breakout structure. Okay, so the bulls get into the market. Wait, okay. So here we got the breakout structure, and if I'm gonna, it doesn't matter like where it was mitigating right now. Okay, just accept the fact again, guys. If I'm gonna show you what we need to do before mitigation, as I told you, we need to take out the liquidity. Can you guys see this? again, we just took out liquidity. So if you was entering there, you are stupid. Because why? You don't sorry, I don't mean like you are stupid, but you are. Because you can't understand the fact that, that there's no liquidity, okay? And the liquidity need to be taken before market can move. Market need to eat, same as you. Just remember, write it everywhere. Market need to eat before he can move. He need the energy, okay? He need the funds. So we took out the liquidity, and then what happened? We were continuing in the bearish structure. Because why? The market just confirmed me that we are bearish because we create a low and then the lower high. So the bearish structure was confirmed, in my opinion. So right now, what I was doing, I was just waiting with this point of interest. The market, I miss it. I didn't put my limit. I'm so sad, but it happened. It is what it is, guys. You can be in every trade, okay? So I'm not in this trade, and I was just following. Again, as I told you, we are in the minor structure, and we follow in the major. And right now we're looking for the minor structure. But look, what's inside the minor structure? Minor structure. Okay. So again, a different color. I don't know, guys. Can you see it? Can you see it? Just drop me one. Oh, I need to look to the chat. Just drop me one if you can see it. Yeah, okay. So we got the high again. We got the high low. High. Okay. Again, here, what we took here, what we need to take before we can move, the market needs to eat. Okay. So the market is fed and we can move. Look. Here, the market was hungry. Okay, they were hungry. They don't have enough funds like to make the move. But in this point, the market is fed. It's not hungry, and he can move. And just look. Okay, guys. As I told you, this is the accumulation of orders, and this is the distribution of orders. Okay, every time you're gonna see accumulation of orders and then the distribution of the orders. So we took out the liquidity, we mitigated, perfect mitigation. And then we drop. By the way, let me show you the risk to reward on this one, guys. Okay, just this one was 1 to 15 at the bottom. So, but I am not in this one. It's all okay. It's okay to miss the move. Let me continue. We got the high, we got high low. Why? Because this low was respected. Okay, the price you can see just mitigated this demand zone. And then get higher again. But what happened after? We created the high, we took out the liquidity, we mitigated, and guys, look, okay, we broke the structure. Okay, so we are bearish in this move. Right now, in this minor structure, we are bearish. So what I need to also understand, I can like close my order flow point, but the major thing is on the lower time frame here, guys, what I want to show. Right now, what do we have? We got our major structure being bullish, our minor structure being bearish, and minor being bearish also. Okay, so I was just waiting. And why I was waiting and buying in this point, in this wall push, I got like 4 positions, 3, because I closed one. I got 3 positions, 1, 3, 1, 2, 3 on every low. But why? Look, guys, there is the demand zone. We mitigated in, and what we need to understand, every time when you tap into the demand zone or supply zone, you're creating the order flow. What does it order flow mean? It's just the direction of orders. Okay, if here I don't want to drop into the lower time frame. It's more like for VIP members, how we look for our exact entries. But I remember, if I'm right, from the 15 minutes, it was something in this candle, which I was looking for entry at. And guys, I'm not entering the trades instantly in my point of interest. I'm like in 90%, I'm gonna wait for the reaction, okay? So right now, if I will go to the 10-minute, because the 10-minute was the most pretty with the holding supply zone and demand over supply concept. So what we are teaching, guys, we got the break of structure here, so we know that we are bearish, okay? But look, that doesn't mean I can buy on the 1 minute, because I know that the major structure is still bullish, and I can understand that probability of this lower high is here, okay? High low, I'm sorry. This high low can be valid if we take this high. So I need to accept that this is possible high low, that I must trade like that. I can't think, okay? I must accept the only fact, the structure. So look guys, as my alert came, I had my alert, you know, at this low, if I'm right. And I was just like looking and waiting. And then I saw, guys, what is this? And it's not the accumulation. I mean the accumulation of orders. Of course, this is accumulation, but the major thing is this accumulation of orders. What I've been telling you guys, they're gonna come, they're gonna slow down, create equal lows, let's say, then dump the lows and get high. Why? The market need to eat, guys. The market need to eat. They have enough money and they can move. Okay, so again, let me look for this structure. This is my low. This is my lower high, lower low, lower high, and then this is my final lower low. Okay, so I got my breakout structure here. I got my continuation. But what happened then is that price was able to also break to the upside. So we changed it. So I can understand if anything is aligning with the major structure, guys, the momentum gonna be on your side. Okay, and now the major thing what separates us from the smart money traders is, you know, smart money is just basically looking for last sell to buy and I don't know what order blocks, inefficient candle imbalances and blah blah blah. We don't fucking care, guys. What we trade is just in supply and demand. And what I can understand, then this is my holding supply zone. Why? Can you see like how much it was blocking? Something was blocking the market. You can see the market wanted to go high, but it can't. Something just blocking here. It's not something, just the institutions locking their positions and accumulating orders how they need. So we got the holding supply broken. And what does broke me? This is what I ask every time myself. What did broke my holding supply? Okay, I can understand that this 10-minute, what is this? Ready, base ready. So it's a demand zone. Candle was taking me this holding supply. In this point, guys, I was executing the 50%. Why? Because if I go lower to the 5-minute, for example, you're gonna see this, the last sell to buy, and you see smart money got never filled. But we guys, geez, we enjoy the profits. Okay, this is it. The supply and demand leads the market, guys. If you're not gonna accept this fact, you're not gonna make money. Supply, demand, order flow, structure, liquidity. So let me continue. We got the break of structure to the upside. So my major structure is bullish and minor structure is bullish also. Okay, so I got the break of structure again. Okay, and then what happened here again? Let me go. I don't remember the time frame. I will try to find for you. 4 minutes. Let me see. Yeah, this is what I wanted to see. I see this base drop candle. Okay, so this is my holding supply. This is my holding supply. If we also gonna go to 1 minute, if I remember right, yeah, this entry is more complex and more hard, but if you can understand this supply, demand, and order flow, you're gonna understand this entry. I had my point of interest on this last push. Why, guys? If you know how we trade, you know that this candle was the last candle taking liquidity. This candle was the last what was eaten. Okay, this low and this low was taken by this last sell to buy. Okay, and again, where is my liquidity? If I want to enter the market, I need the liquidity. Okay, I'm never gonna enter without the low or high, you know, above or under my point of interest. So I got my liquidity. People jumping into the trades here, but they got stopped out. Why? Because they don't understand what the real demand and supply is. They just playing these smart money order blocks and imbalances. Okay, but we got the perfect 50% mitigation. But guys, we not jumping into the trades as up as we see our point of interest playing out, as I told you. Okay, so again, let me show you the fractality, the crazy fractality of the market. So right now, the structure is looking out like this is my low, This is my high, my level low. Okay. Look, guys, the market gonna give you some, if you are able to listen it, they're gonna give you some, not significant signs that it wanna do something. Like what I mean in this example. What we know about downtrend, guys. In downtrend, we just created a series of lower highs and lower lows, okay? So we expect that after price made the pullback, it mitigated the supply zone. We expect for price to move lower, again, break the structure, move higher, mitigate the order flow and fall, okay? Again and again, just continue and continue. But what happened in this? Guys, can you please somebody mute your microphone? Thank you. In this fact, the market did respected the low, guys. Okay, wait, I'm gonna delete this one. You can see the price didn't broke this low. So this was for me, I was like, okay, guys, so right now, the market is trying to tell me something, but without the confirmation, I'm never gonna execute the trade, okay? Never. Why? Because I don't want to risk my money for something that I don't what I don't want. So I'm waiting. In this point, I just told also to people around, just guys, wait for this supply zone. I'm gonna show you. This is the supply zone. It was controlling the market, right? Because guys, why? Why it wasn't this one? Just look what is market telling. We blocking, we went through, okay? So the market had the holding supply, and I say, guys, wait for holding supply to be taken out and for the structure to be bullish again. Because why? My major structure is bullish. So if mine are gonna be bullish, there's a high possibility in that the market just gonna totally skyrocket out. And gold is best example because gold just love to move, okay? Very impulsively. And guys, all of you can see, also the smart money traders right now, right here, you can see this push to the lows and then to the high. So I just mark this candle, and I was scared. I thought that we're gonna come to 50%, but I was scared. I'm gonna tell you, I was scared, and I was okay with having like bigger stop loss. Okay. This for gold, this was like 80, so 8 pips on the normal currency. So if you don't know how to just calculate the lot, okay? So I was just waiting, and the price did exactly what I want. We just removed the holding supply zone and we broke the structure. So in this move, the demand was stronger than supply zone, okay? There was more demand, there was more buyers than sellers, because why? We were able to take, let's make it like those sellers out. So demand was stronger. And then, guys, again, what does market need to do because before he can move? Guys, can you mute yourself, please? I don't understand that you don't. Lucas, can you please? Maher, can you mute yourself, please?
Okay.
Thank you. Make it a sub, man, please. I don't want to kick you out, but I will have to. Jesus, guys, this is so annoying. And I can even kick him out. Jesus, Lucas, help me, please. Okay, doesn't matter. I'm gonna continue. I don't want to lose time. So I was just waiting, and the price just perfectly tapped me in. And then we just totally went crazy and just make the push higher. Okay, so I managed to take my 11% right now, right here. And the next thing is when you're gonna also follow the order flow inside that candle, you're gonna find crazy entries, guys. You're gonna find crazy entries. What I mean by order flow, so let me show you. Again, if you just guys gonna wait, okay? Let me show you. I know that major structure is bullish and minor structure is bullish also, okay? So, okay, it's okay, Maher, it's okay. So I can again wait until the price gonna be bullish again. Why? Because right now I got low, lower high, lower low. So I'm bearish, okay? I look, okay, the price, Jesus, it was so fast. The price, never mind. The price just broke out, so we are bullish. And look what happened. This is my last liquidity trap candle, so I can look for entry. I wasn't looking on the 50 in this. I was just looking at the wall candle and the candle before. If you can understand that this wall push is your base push, okay, you can understand which candle to choose. But guys, you know, I'm sending the 1 minute entries and like that, but I don't like it too much. I love to trade 6 month time frame, guys, and monthly, weekly, daily. I love it. I love higher time frame because the higher time frame is the only powerful tool in this world. Okay, if you're gonna understand the higher time frame, you're gonna understand your trading. So we can just wait, and then there's your OB, or how you want to call it, sponsor candle, high efficient candle, I don't know. So you're waiting, you got your entry here, you got even better risk to reward. Okay, you got the same as me on this one, doesn't matter, but you are waiting. So if in your rules is to wait for extra confirmation, you can just wait. And again, guys, let me just show you. We got this high. This high was broken, and look at this last big candle. What is this candle? It was taken low. It was taken liquidity from those lows, you can see. And then we broke the structure. So I was just looking at the 50% as soon as the price just broke. And again, I was just happy to just add the position here. And like